Well, hello, everyone. Cynthia Tillman here with Interactive Brokers, and thank you for joining today's webinar being brought to us by Toggle AI. And today's topic is, can machines help active investors or traders? Now, we're very pleased to have Jan Szilagy, CEO and co-founder of Toggle, for today's presentation. Jan is the CEO and co-founder of Toggle, a fintech startup that aims to level the playing field for discretionary investors. He's spent most of his career with Stanley Druckenmiller at Duquesne Capital and as an analyst and global macro portfolio manager. He was most recently co-chief investment officer for global macro strategies at Lombard Odier and global macro portfolio manager at Fortress Investment Group prior to that. Jan has completed his economics PhD under Ken Rogoff at Harvard and holds a BA and an MA degrees in mathematics and economics from Yale. So with that, I want to thank all of you for joining here this afternoon, or thank Jan for joining. I'm going to go ahead and pass you those control, Jan. So if you can share your desktop, let's go ahead and get underway here today.
Perfect. Thank you, Cynthia, for this very kind introduction. Hello, everybody. Really good to be here. As Cynthia mentioned, I'm the CEO and co-founder of Toggle, a fintech company that is aiming to help active investors leverage data in a much more efficient way. And so the topic of today's conversation really is going to be, how can active investors do a better job at leveraging the data and machines in order to make these investment decisions? The agenda for today's talk is actually quite straightforward. Really, the goal for us today is to spend a little bit of time talking about the larger problems of using data and machines in the investment process. And then secondly, spend quite a bit more time in a hopefully more interactive fashion, going through some use cases so we can show you how we currently approach and help investors with leveraging such data. Now, what I want to begin with is couching the problem a little bit. The background for myself and most of my colleagues is actually in portfolio management. So as portfolio managers at places like Brevan Howard, AllianceBernstein, Fortress, and so on, we were constantly faced with the challenge of not really having adequate infrastructure to cope with this growing mountain of data. We were fundamental investors, not black box operators. And so the goal was to try to always determine what other investment ideas and actionable trades we could derive from the data that touched on macro, micro, and so on. And so our process typically involved downloading data from a variety of sources, combining them, then maintaining and refreshing oodles of macro-enabled spreadsheets, and also writing ad hoc code to answer questions like, if this happens, what next? So it really felt a little bit like sipping from an ocean with a straw. It just felt like we were taking this really pedestrian approach to something that should have been substantially more efficient given the technology that we saw available all around us. Now, typically when people think about machines and investing, I think their thought goes to black boxes. So you effectively have machines that sift through a lot of data points and then in effect, in a completely hands-off fashion, generate buy or sell signals that are then to be merely executed. But we actually thought that there was another paradigm to potentially consider, which was we have smart assistants that are ubiquitous in our daily lives. And so why couldn't they exist in investing? Is it really so binary that either you don't use machines at all, or if you do, you have to completely transfer the agency from yourself to them? Is there a middle ground, a kind of a man-machine collaboration, if you will? So let's think about first, what are machines actually really good at doing? They're certainly very good at monitoring and processing large amounts of information and data points. They're also really good at uncovering hidden price patterns in assets that often take place around large events like elections, earnings announcements, and so on, or data changes, for example, a big drop in momentum or a rise in PE on a particular stock and so on. They're able to test each of these relationships that they find for robustness, so they're also quite good at doing fast calculation and statistical analysis that gives you a little bit more confidence in these results. And then finally, they're able to deliver curated insights that are tailored to specific users. So a machine is quite good at matching your interests with the analysis that it has produced. The next question, I suppose, a logical starting point perhaps for us is to ask ourselves, well, what are the steps in the investment process where machines can actually add most value? And I would say that there are probably at least 4 parts where you can get substantial value from a system like Toggle or from machines more generally. The first one, and probably one of the critical aspects of the investment process, is idea generation. So this is really the point where you might start to think about what is broadly the kind of portfolio that I would like to have, what are the kinds of trends that I would like to invest against, and so on. And the natural question that will always come up is, well, this is the view that you hold, for example, that cloud computing will be incredibly important over the next 5 years, that the macro picture is fast deteriorating, and so there's something that needs to be done on that front. The question after that is, well, what assets best reflect your thesis? And this is certainly an area where machines can be quite helpful because, again, they're able to sift through a number of sensitivities and really narrow down the scope of assets that may be the best expression of your thesis. And we'll come back to that, and I'll show you much more concrete examples of how you could go about doing this. The next point in the investment process that machines can also add value to is hypothesis testing. And by this, I mean these various hunches and instincts that we have as traders observing the world around us, the changing information set. We read a research report, we chat with somebody in an investment forum. And so we develop a hunch or an instinct. For example, I think that because the economic environment is about to deteriorate, these are the assets that are going to do the best. And so again, machines are able to bridge that gap between you and the data so that you can easily test some of your hypotheses. In other words, you don't have to go with just a hunch. You can actually ask a question such as, I believe this is what is going to happen next, and then see whether or not the machine is able to uncover similar paradigms in the past and either confirm or disconfirm your hunch and your instinct, which again, overall should really contribute to helping you prune the investment ideas to those that really ultimately end up having the best chance of success. The third one is asset due diligence. So you've identified a particular asset. You now think this is the one that you would like to buy or sell, but it might always be a good step in the process to ask yourself, am I missing anything? Have I not thought of something that is really important and that might actually meaningfully challenge my thesis? And so here again, we'll show you how you're able to put your view to the test and try to really harness the power of computing to put that mosaic of all relevant data together for you and show you which direction the data is currently pointing. Where are price pressures strongest? Is it in the direction you expected? Was there something something unexpected that's happening? And then finally, but certainly not least importantly, is the portfolio risk management. Once you've set up your portfolio and you've put on a trade, the infatuation with continually finding new ideas can often mean that some of the trades you already have can to an extent be neglected. And one of the things that professional money managers are taught from very early on is that it's incredibly important to maintain and stay on top of your existing positions as well. Because as we know, it can quite often happen that you actually were correct about your view, about your thesis, about the asset that you have in your portfolio, but you potentially overstayed because you were starting to look at some other ideas, you got carried away, you were expecting the move to last too long, and so on. And here again, the machines can help quite substantially because they can always provide this real-time alerting mechanism that can say, by the way, you know, momentum here seems like it's coming off a little bit. It's had a good run. Maybe this is the moment to revisit this position and see whether or not the conviction is still there. Has the thesis largely played out, and so it's time to potentially replace it. So the bottom line really is that instead of competing with machines, our view is that they can in fact empower users by replicating really, really fast the work that investors are already doing. And so what you'll see that the basic principle behind Toggle is really to create a kind of almost a junior analyst that is sitting there right next to you and crunching the numbers and then putting them into a format that you can easily read, understand, and then either agree with or dismiss. And again, we'll show you what this kind of analysis looks like. But advances in AI have really come very far, where a machine is able to communicate with you in the language that you understand. This is not now a question of you having to read code or program or anything like that. Now, I'm going to start talking about some specific use cases, because what I really want us to get into today is this discussion about what are the sort of use cases that you might specifically want to use something like Toggle for. Give me just 1 second so that I can adjust my screen for 1 minute. 1 second. Apologies for the delay, but this is clearly showing some level of newness to the webinar world. Let me switch to this screen now. All right. Hopefully everybody can see the screen. What I'm really showing you is kind of what I would call the front page, the kind of the user interface that you would see if you were to have an assistant like Toggle basically co-pilot with you through this process of investing. And the specific idea that I want to start with is a case that probably many of you can really identify with, which is you read and are surrounded by headlines constantly. So for example, I'll just give you here a particular case of translating changes in the macro picture into a specific set of trade ideas. So just for the sake of the argument, these were some of the headlines that, you know, over the past couple of weeks, people would be seeing the newspaper about Canadian inflation. And I understand that this is maybe not something that a lot of you think about, but think of this in the broader context of economic activity, inflation picture changing. And so as you see these kinds of headlines, the question in your mind immediately will be, what does that mean for my portfolio? How should I position? Are there opportunities in this that I should really have a think about? Are there stocks or assets that I should trade that offer an opportunity? So let me show you what, I think it's switching the screen. Let's say you're faced with these kinds of headlines. You then start to think, okay, it's time for me to adjust my portfolio. This is what you might do inside Toggle. Now, before I go through specific cases, let me explain a little bit what Toggle really does. Toggle on a daily basis goes through almost 1 million variables, and variables are either earnings momentum, it can be price changes in a particular stock, can be oil price changes, yield curve, and so on. So any number of both fundamental and technical price data that you can imagine crunching. It is monitoring these to find a particular set of dislocations that could impact a specific set of assets. Now, what do I mean by this? Let's say that you now are coming in with the view that inflation being as low as it is, might potentially have implications for some assets. So inside here, you would now like the machine to filter down opportunities that it's uncovered to fit the criteria that we talked about. And so you might say, I'm looking for specifically ideas in the equity space. I want this to be leveraged in Canada. So we're further reducing this to only include Canadian names. And so after that, we also say the driver should just be the macro picture. And you start to see cards that now are very, very close to this, to the headlines that you might be seeing. So in effect, you're seeing, Citi Inflation Surprise Index. This is a measure that Citigroup is producing that's usually used particularly by professional traders just to kind of follow whether or not inflation has been tracking lower or higher than expected. And the fact that it's nearing lows, it means that there's been a streak of inflation prints in Canada that has been surprising to the downside. In other words, inflation has been printing lower than expected. Now, as you can see, Toggle actually uncovered a range of different assets that it thinks could be sensitive to this. And so, for example, we look at the first one, it says Canada inflation surprises being lower has in the past led to increase in the National Bank of Canada price. You look down and you see some energy stocks, you see some material stocks and so on. So you might want to restrict it further. Let's restrict it to just the material sector, for example. And now we start to see some really interesting results. For example, here, there is a company that actually owns a number of gold mines in Canada, Yamana Gold, and this one also appears to have a positive relationship with negative readings in inflation. So if this piques your interest, you think, this is actually something I'd like to look into in a little bit more detail, you can simply click on this analysis. And what you see in front of you is the written up work that the system will have done, the analysis that the system would have done in order to explain the relationship between inflation prints or the changing macro environment and the subsequent stock price. It gives you a quick description of what's been happening with indicators. So basically, inflation indicators are near the lows. And it says, look, historically, this has actually led to increase in Yamana Gold price as shown in the chart below. And the chart below shows you, given the starting point around now, what the typical experience has been for the stock price subsequently. So you sort of see this median projection based on the 5 similar occasions where in Canada we had similarly experienced a decline in inflation indicators, as well as the confidence band around it. Obviously, there is going to be a margin of error around all of these, and so the system wants to be as transparent as possible to kind of highlight that the outcomes, of course, could end up at 12 over the 3 to 6 month horizon, but it could be also higher or a little bit lower than projected. This is all of the information that a trader would want to know on the basis of a thesis. Where should the price go? What is my risk? When do I know that I'm wrong? So for example, if a month after that, the price starts to substantially deviate from this analysis, it kind of starts to raise a red flag that potentially the relationship between the inflation and the subsequent rise in the stock price was not as strong as it had previously been. And so it gives you immediately a clue that this might be the time to revisit the thesis and potentially remove the position from your portfolio. The machines are able to do very much the same analysis as presumably us as active participants in the market would have done ourselves. They will go and examine these past periods. So what were these other times when inflation was also low? And not surprisingly, some of them coincide with very bad periods like the global financial crisis, some with much more recent periods. And it then tries to learn from these periods to inform us of what, if any, pattern exists there between inflation and gold prices. Now, intuitively, a relationship between inflation and gold price probably strikes a chord with a lot of investors, because if inflation truly is near the lows and starts to bounce here, often investors might start to look for assets that have a relationship with gold or even gold itself. And so it's not crazy to expect that the the price would rise subsequently. But the key about having the machine bring that up to you is it will typically happen much before the market has necessarily caught on to this. And so timing here is also important because machines are able to give you these critical updates at a point where hopefully the market has not yet pushed these prices too high. The machines, just like analysts, are also very good at explaining the reasoning behind this and also assessing the patterns from the point of view of somebody who's investing. In other words, are the P&L drawdowns meaningful and potentially off-putting for a trade like this because they're simply too large for you to be able to hold that position? How high is the accuracy rate? Have we seen this condition triggered across business cycles and so on? There are any number of things that, again, a machine can crunch the numbers really quickly and give you that instant insight into your idea generating process. Now, as we sort of explore this, the idea really is that you're able to very quickly potentially also go and say, aha, I would like to potentially explore some other ideas as well. So maybe it's not just about, so let me choose the same criteria, and maybe we're going to this time focus and zero in on something else. So we've looked at something in the materials space, but maybe there are other things that we might also take a look at that are similarly relevant for the analysis. And so we see there's, for example, Methanex, Vermilion Energy, and again, clicking on this, you can very quickly get the same idea as you did before. What is the expected gain? Where would you know that you might be wrong about a position, and so on? So this is just one example. This is just one example of the kinds of things that you're able to go through with the machine. 1 second. Okay, so the next thing that you might think about is, what are some of the other headlines that we could potentially imagine currently being in place? So just recently, some of the headlines that we were seeing had to do with, for example, sector rotation. So if you looked at some of the recent Mad Money headlines, there's a lot of talk about how value has recently lagged, and potentially there might be a moment where we need to start to rotate from tech into some of the value plays, potentially to some of the industrials, because markets tend to move in cycles. And so similar to that experience, again, in this case, you could easily look at something like you select equities, you click on US, and this time you might say, okay, I'm really interested in looking for something that is currently cheap in value, that has potentially cyclical properties. And so we get to suddenly to something like real estate. And so again, you can see, as you've had before, the system is immediately able to highlight a number of different things that could be relevant for this specific sector. And we have things like 4-star group, Host hotels and resorts, and so on. And because we've selected things with cheap valuation, it's highlighting primarily things where the PE has reached a potentially really attractive level that deserves another look. So for example, let's take a look at LTC properties. And what you'll see here is an example of a stock that has now reached a level on PE that historically seemed like it coincided with a bounce in the price subsequently. So what you can see on the screen up here is the median projection would say that over the following 3 to 6 months, there could be a gain of about 18% on the basis of valuation alone, inside this kind of a confidence interval. And this, again, is an interesting situation to look at, because you might say to yourself, aha, I am looking to rotate into this sector, but what I really would like to find are things that specifically allow me to potentially, you know, get a better return on my investment. And so again, you can see, as you've had before, the system is immediately able to highlight a number of different things that focus on some of the more call it cheap value plays and so on. So that's sort of the idea behind this. And as previously, you can also see that there is any number of criteria that you're able to check that, again, machine will crunch the numbers for you. So let me finish here on the idea generation bit. Now, what you could then do is you say to yourself, fine, you know what, this actually looks like quite an interesting play. Maybe what I want to explore is what other price pressures am I maybe not seeing? Is the machine actually pulling together some other potential drivers that are also important for this stock? And so you can simply do some really quick due diligence. We put in LTC NYSE, and what it'll show you is, actually, in this case, there has been a series of price pressures that the system has been indicating, and so we're finally witnessing a bit of a breakout on the basis of this. So valuation is the one that we were looking at, but actually, if you look at some of the other insights, there's also been momentum, and so we can click on this, and very quickly, you're able to see that Toggle also highlighted a few days earlier that there has been a substantial increase, there has been a substantial drop in momentum to a point where actually historically it had stretched too far. And let's take a look at this analysis really quickly. You see here that actually momentum, in this case 12-month momentum, has reached a level that the stock had seen only a handful of times before. In fact, only 7 prior episodes have had something like this. And as a result, it's concluded that actually you are likely to see a bounce. And so now suddenly you're seeing a situation where it's not just the valuation, but also potentially momentum, some technicals, equity yields, and so on, that are starting to point in the same direction. So as you build this mosaic going from I should rotate into some value plays to real estate, and then within real estate, identifying which stocks in particular could be most attractive, inside Toggle, with the help of a machine being able to crunch all of these numbers, the process becomes much, much faster. And hopefully, this is the kind of process that you may have in place already, but really the idea is that you're able to speed it up, because just as we've identified this particular asset, we could, in principle, have looked at any number of others really, really quickly. And you're able to sort not just on valuation, you can also look for things that have been oversold, things that might have particularly strong or weak momentum. Anybody who also uses technical analysis as part of their toolkit, that's again another thing where the system is certainly able to help quite substantially with identifying patterns that actually historically have been quite meaningful for the for future price action. I'm going to move away from idea generation, because I think that you kind of see the point of this workflow of starting from top down and narrow down to specific stocks. And instead, what I want to focus on now is how might you use machines to maybe test some of your own hunches? Because again, sometimes what you really want is ready-made ideas, but sometimes you're really in that working mode. You want to try and see whether or not an asset that you already like and would like to potentially add to the portfolio, is it really going to respond to the drivers that you're exploring in a way that you expect should happen. So let me, in this case, move to what we call sort of our workbench, the DIY part. And let me, for example, just for simplicity's sake, we load the S&P 500. So this is obviously the benchmark that most investors look at least from time to time, as a proxy for risk. And so what you might be thinking is, okay, let's say this was March and April, and the economic situation was deteriorating really rapidly. You were having to make a lot of decisions about whether or not to sell out of your entire portfolio if you were quite long risk, or if you had a lot of foresight and had actually been short the market going into this, is this the time to get out? And so again, you might load a proxy for economic conditions. This time we'll do the economic surprises index. And you might have asked a simple question, which is, if I'm sitting here in sort of April, May, when I've seen this big deterioration to a point that, you know, we really hadn't seen in a long time, is this something that can this tell me something about what the market will do from there? And so what you can do is you can, inside Toggle, simply highlight a particular level, and you do what you could do in a spreadsheet, but it's much faster to do here. As you'll see, simply say, tell me, analyze all prior episodes when I've seen this sort of level reached, and tell me what the S&P did subsequently. And so as you can see here, the machine is now going to go back and crunch the numbers. And let's take a look at what it identified. If we go back to the past 5 years, you can see that instantly the system was able to highlight those prior periods where we've seen similar degree of weakness in the economy. So that's the starting point. The system now goes back, identifies these dates. In fact, if I go on a longer horizon, you'll see that there's actually quite a bit more of those. And it then tries to see if there's anything that it can conclude on the basis of the behavior of the S&P around those prior episodes. And so what you typically see here is the system's best guess as to what would subsequently happen, along, again, with the confidence interval that we discussed before. So again, as we were highlighting in those individual analysis, the system is giving you kind of a median projection, which, as you can see, actually the S&P ended up outperforming the projection by quite a bit, but the projection gave you the key clue, which is that if you were thinking about selling at that point, you were probably already too late, because the projection was very firmly suggesting that in most cases, in fact, in the majority of cases, the S&P would typically move higher after that experience. And so the reason why I wanted to highlight this is, presumably as investors, traders, and so on, you are faced with decisions like this on a daily, weekly, monthly basis, where you are going to be examining a particular driver, a change in the environment, be it on the earnings side, on the macro side, or otherwise. And you might want to quickly just check whether or not you think that the data confirms your intuition about where the market or the asset price is headed from there. Let me move on to another example, just so that we don't focus specifically just on macro. So I'll clear this, and I'll load the favorite of many traders, which is Amazon. Now here, what you might take a look at is Amazon and say, I want to actually examine, in this case, maybe the 3-month momentum. And so what you might have noticed is that momentum in this stock has really come off quite substantially. After this really, really big rally, the momentum has come off as the stock remained kind of range bound. And the analysis you might want to do here is to say, okay, where do we typically go when we've seen momentum turn negative, or at least come off substantially to near zero in this case? Is this good for the stock? Is it irrelevant for the stock, and so on? And the analysis that you might do, again, is just point and click, although in the background, we're really exposing the entire power of the data science engine that's powering all of the insights that we already showed you, but making it available for you in the form of this charting tool. And so again, you select this, you say, okay, I want to analyze the change. You select confirm. And now what the system is going to do is basically go back and say, let me find prior episodes where we've seen momentum come down like this, and has that been typically good or bad for the stock? And you can see quite quickly that actually typically, visually, when you've had these other periods when momentum was similarly weak, that typically they were followed by a rally in the stock. We can obviously go back quite a bit further because there are many examples of this. We also have a long data series for Amazon particularly, but going back to the chart that's not so hopelessly squished you can't see anything, you can see that the system is suggesting that actually typically after momentum comes down the way it has this time, there is actually upside risk to the stock. Again, taking into account only momentum, but this could be a good way for you to be able to test some of these hypotheses, or if you have it in your portfolio, a way to really at least be able to decide whether or not this may actually not be a good time to get out of the stock if you own it and you are worried about owning it. Now, I want to move away a little bit from this hypothesis testing and idea generation to the idea also of asset due diligence that I was mentioning before. And I quickly showed you one other capability that I want to spend a few more minutes on now, which is this asset due diligence. So let me for a second go back to this main screen, and instead of looking through the insights or slicing and dicing the analysis that the machine had produced, you might instead try to just put together the entire mosaic for a specific asset. And let's take Bitcoin in this case, for example. Oh, 1 second. Hold on a second. Let's try this again. So if we load something like this, what you're able to see here is the system tries to pull together a number of different variables that should be impacting the particular asset that you're looking at. In addition to that, it also shows you which of these variables currently have reached a critical level where actually an insight was generated on the back of this. And as you can see, what Toggle will tell you is that it has been generating a series of really positive pressures for quite some time. The first one back in September already, but actually very little happened afterwards. If we look at this early one, the system was really just highlighting that volatility in Bitcoin, 1 month realized volatility, had reached a recent low, and that historically that was a good entry point for Bitcoin. Now, if you had bought it here, you would think, okay, but nothing is really happening. Yeah, sure, you have a little bit of a rally, but not much beyond that. Then suddenly you start to see a number of these other pressures coming. There's an event, there's another volatility one, there's an event which was basically precipitated by the upcoming presidential election, and so on. Then there's a technical pattern where you have some consecutive move prices that suggest that the price could be extended. And so you can see how, if you're considering whether or not you should invest in Bitcoin across these periods, the system would periodically either reinforce or weaken that conviction, but more importantly, give you a sense that you really are looking at a much larger picture than if you were doing this more of an ad hoc analysis, looking at things here and there and potentially missing out some very, very important bits, either on the technical side or momentum or otherwise. So once again, this is where machines can be very helpful because this is updated in real time. So anytime you want to examine any kind of asset, and Toggle is currently able to cover over 13,000 assets across a range of asset classes, so currencies, fixed income, equities, both equity benchmarks as well as single stocks, all the way to commodities and credit. It's able to give you that kind of a glimpse of what we should be looking at. Now, one other topic, and this is really the fourth of the things that we talked about where machines could potentially add value. So idea generation, hypothesis testing, asset due diligence, the three that we had looked at so far, is also the idea of portfolio management. And so ideally, the system, to the extent that it has access to your portfolio, is able to also generate alerts specifically about positions that you already have. Because what I was emphasizing early on is that it so happens that very often you might have these positions on, but are not necessarily focusing on, you're not necessarily focusing on them enough. There might have been things, developments that have happened that really you should be aware of, and therefore you should do something. For example, let's look at we'll look at West America Bancorp. So as you can see, these cards are sending alerts along similar dimensions that we had already explored. Changes in sentiment, changes in yield levels, changes in analyst consensus. But more importantly, it's not just highlighting that there have been changes, it's telling you specifically how these changes should impact your portfolio and whether or not it means that you should either add to a position or potentially take away from the position. So when you click on this, the analysis is very much what you already know. It basically shows you the projection, shows you where it would go. But let's say that you had West America in your portfolio, and this is the experience you've had, and you're thinking, I really must get out of this. What Toggle would basically say is the following, which is, yes, I understand the frustration. It feels really bad and very painful, and you want to get out, but actually, this may not be the right time because you've now overstayed long enough where you should expect a bounce. Now, it doesn't mean that you necessarily have to listen to what it says, but at least you'll have a much more complete picture as to how and what your decision will be based on. And that's really the goal behind what the portfolio tool is meant to do. And so, as you can see, there might be economic growth alerts for currencies. There might be key price level for a variety of different assets, including stocks and so on. But that's really the goal, to have in effect a dashboard that you should think of as the same kind of dashboard you have in your car. You sit in your car, you're the driving seat, you're deciding where you want to drive and when you're going to leave, but you really rely on the car to tell you if there's a traffic jam ahead. And so if there's a traffic jam 2 blocks down, you'd like the car to recalculate a better route so you don't spend 35 minutes in traffic. Or similarly, you also rely on the car to tell you if your gas levels are low, and so you'll need to stop at a gas station somewhere. So that's the way in which we can think of machines can really help individual investors, really empowering them and not at all taking the analysis, the agency away from them. So what I want to do now is maybe pause here. I've thrown a lot of information at you. We kind of really did sort of a tour de force of all of the different segments where machines we think can be very helpful. And we've had a very good experience with Toggle. Toggle has now been around since for just over a year, and we've seen tremendous success with some of the traders that have been using this. But I want to pause here and just see if there are any questions that you might want to ask.
And Jan, while you're looking at the question panel, I want to remind everyone there is a panel over on the right-hand side. Notice the questions title bar. If you double-click there, you can send any of those questions you might have for Jan at this point. But also, before we do get started in the Q&A, I'm going to grab the controls back because I do want you to be aware that as an Interactive Broker client, you'll get access to this information through IB and to Jan's tool. Now notice I'm going to go to the Interactive Broker webpage, and I do want to show you underneath the pricing menu is where you'll be able to find research and news information. Now, I've already navigated there and noticed that this page here, you could do a simple find, or you'll see that these are loaded alphabetically, so you can access the Toggle information directly on this page. Now, notice here there is a free subscription, and I'll show you how you can access that through the Trader Workstation momentarily. But also do want you to be aware that there is, you'll see here, there is a link here to learn more, but it also gives you access to the third-party tool that Jan has been showing you. I'm going to jump over into this page here where you can find information on Toggle, and also if you are interested in subscribing, notice here that it is provided, or the link to your account management or client portal will give you the ability to subscribe to Toggle information. Now notice here there's even a link to the website. Now from this, also want to show you that within the Interactive Brokers Trader Workstation, you can easily access that Toggle information underneath the new window button. Notice here, there's analyst research, and you'll see, let me grab this. Notice that you can access Toggle directly from this page. Now, this is going to give you that subscription here. Now, once we have opened up Toggle, you'll see that it opens up in a separate window. You can expand this window, but all of the different reports are available here, and simply clicking on any of these reports will bring up that research article and make it available to you. So I wanted to point out that you all will have access to this information through Interactive Brokers. Okay, so now that you've seen how to access the information and even access some of the reports, let me send this back over to Jan to wrap up. I see there may have been some additional questions that come in, Jan. So if you can tackle those now, back to you.
Perfect. So there are quite a number of questions. So let me begin. Let me take all of these in turn. I'll go back to this. The first question that we've gotten is, what is the pricing of your product? So let me explain a little bit how this basically works. Is we have really two tiers. There's kind of the institutional tier that's currently at $100 a month per single license, and then we have the retail version that'll be offered free initially for the Interactive Brokers users, and then is expected to cost about $15 per month. And as Cynthia has mentioned, you're already able to subscribe through the Interactive Brokers website. The second question was, are retail or individual investors able to obtain this technology? And the short answer is yes. This technology is already available. We have quite a large number of retail investors already, and so you should absolutely check us out, subscribe. It's very easy to do. Cynthia had shown you some ways. You can also subscribe directly on our website at toggle.global, and so you're able to test drive the system for yourself. The next question, sorry, I don't mean to rush through them, but there are quite a lot of them. The next question was, is it possible to add data to Toggle? And so the short answer to this is not yet. We are at the point where we're currently including all of the data that you've seen is included with the subscription. So you'll have access to a very, very large body of data that you'll have at your disposal. And that's all included with the Toggle subscription. But over time, we do envision also having the capability where you can potentially pipe in some of your custom data and add that to the overall scope of what the system looks at. The next question asks, can I load my portfolio into Toggle? And the short answer again is yes, absolutely. We are fully integrated with Interactive Brokers, and so if you have an account with IB, you're able to simply click on the Connect My Portfolio button inside Toggle, and it'll seamlessly, within a couple of clicks, connect and update all of your positions inside the IB portfolio. For those that don't have an IB portfolio, obviously the best way to get that connection is to have one on the IB, but we do offer a connection via Plaid to some other providers as well. The next question is, how near to real time can AI deliver results? And really the answer is it's pretty much real time. What happens in principle is that we continue to look at, especially at the end of the day, we immediately comb through all of the data, closing prices, any updates. The frequency will vary on the data series we're talking about. So for economic data, the updates obviously might happen with a weekly or a monthly frequency. For real-time prices, it will happen substantially more frequently. But the answer is we try to do it as close to when we get the latest information as possible. And as soon as the numbers are crunched and the insight is published, every user immediately gets an alert if the alert is about a stock or an asset that's in their watch list or in their portfolio. So to you, the time between the calculation and the time you get the email will be very, very short. Another question is, what asset classes do we cover? And so the asset classes that we cover are virtually anything that you could imagine trading on Interactive Brokers. So from full range of FX crosses and futures to fixed income, again, futures and cash bonds, to equities, both equity index futures, ETFs, single stocks, and so on, as well as also commodities ranging from copper, crude oil, to oranges, potatoes, and so on. and then finally we also have a growing area inside the credit space. Then another question is this the final product, or are we releasing new features? And our resounding yes, we continue to release new features. In fact, we just released a new one this past week. We are working on further features as we speak. So we are very keen to continue to receive user feedback, because actually a lot of the work that we do has really been informed by the pain points that we see investors encountering. Where are some of these other levels and points at which we could alleviate the workload a little bit by bringing to bear this awesome computing power, as well as the advances in AI that have been really substantial and accelerating over the last 5 years. The question is, do we have a roadmap, and what can the users expect for 2020 and 2021? There are really any number of things. For example, one of the things that we expect to have in over the coming 6 to 12 months is the ability to track each of these patterns in real time. So imagine if you found an insight on a particular asset and you decide this is a really good one, and you would like Toggle to track it for you, in particular, to let you know as soon as you've left some of these confidence intervals. Are there points at which you can immediately send you an alert and say, look, we thought that momentum here was stretched enough where Amazon stock would bounce, but it looks like it continues to underperform. So this might be a moment for you to revisit the position and potentially get out. That's one example. Another one will be obviously the growing knowledge graph, where we'll continue to increase the scope of data that we analyze, and so hopefully really dramatically increase the kind of the flavor of the insights that we're able to show you, ranging from macro to micro to sentiment indicators, Twitter indicators, positioning data, insider sales. Really, sky is the limit on that front. One question is, is this available for non-US stocks? And again, absolutely. Although our universe is most complete for US stocks, we have very extensive coverage of European stocks, increasingly also of Asian stocks and so on. So we have quite a full suite there, and we definitely want to encourage anybody who's interested in exploring this to check that out. If you think that there are stocks that are missing, let us know. We can usually add them quite quickly, particularly for some of the new IPOs and so on. The next question is coming from another user that's saying, can we help you find the best structure of a trade? And again, this is probably where Toggle's strength really lies, because what you were able to see is that we show you a kind of a quantitative underpinning and a set of scenarios that could play out that really allow you to think about options versus stocks, for example. So let's say that you look at the insight that Toggle has put together, and it shows that, yes, this is quite an attractive risk reward, but it has a very volatile path. And so you might decide that relative to the cost of implied vol, that this would be a great time to actually end up using options as opposed to the outright. On the other hand, you might have some that show a smaller final return, but it's quite a steady path. And so why pay the theta when you can, in principle, just invest in the outright asset? Another user is asking if they can be a beta tester, and the answer is absolutely. We're always looking for beta testers. Please let us know. Just send us a message, and we'll get you hooked up. Are we active on social media? Also, yes. You can see our posts on Twitter. We also have a very active subreddit. So for anybody who likes these types of forums, we have a very, very lively discussion there, always with a number of users. So we encourage you to check that out. We also have daily posts on YouTube, so you can subscribe to our YouTube channel. These are all outlets where you can interact with us, see some of our outputs, and also see how other users are reacting to it. Are there stop loss type indicators that tell you when a probable trade is likely to have deviated from past trends? Yes, absolutely. So what you were able to see earlier is that each chart that we produce comes with, and actually I can show you this on this, each chart that we produce always comes with not only the confidence interval, but also with a very clearly defined line below which we consider the deviation from past paradigm to be meaningful enough that you should consider getting out of the trade. Again, every trader has a different approach to stop losses, but we try to be as specific as we can to give you a really good grasp on when is the thesis potentially wrong, at what price level exactly should you consider thinking about giving up on a particular position. And then, is there some data that I can find only on Toggle? The answer to this is yes. There are some data points that we have, including on that we produce, but really the key and the appeal of Toggle is not so much in having data that nobody else has. It's the fact that we let you leverage the data that you may already have access to better. So when you look at some of the data points that we look at, analyst revisions, earnings growth, momentum in stocks, MACD, various technical patterns, macro picture, these are data that already exist out in the ether, but harnessing them and translating them into meaningful impact on your portfolio and your stocks is what machines and Toggle in particular are really good at. So think of this as being reasonably ordinary inputs, but very extraordinary outputs that Toggle is able to generate. How can a user activate the Toggle AI from within IBKR mobile? That's a good question. So currently, we really encourage you to actually do it on the desktop because we don't yet at the moment have a mobile app. But actually, I should have mentioned this before when somebody asked a question about the roadmap. We are going to have a mobile app by the end of the year as well that you'll be able to use as an extension of what's currently available on desktop. But I would encourage you for the moment to check us out at toggle.global or on IBKR website, and you'll be able to see the links where you can easily subscribe and then also connect your portfolio. The final question, actually it's not the final question, there are more. Do we have any learning resources for investors? Absolutely. What you're able to find if you go to the Learn Center, again on toggle.global, we have a range of videos and also short write-ups that explain in a lot more detail the mechanics behind each Toggle insight. We have some short but very informative videos that speak to the star rating, how do we think about the analysis, how you can navigate Toggle, and I definitely strongly encourage you to take a look at those. We also have resources for newer investors that speak specifically to different asset classes and how they might be sensitive to a variety of data sets and so on. Another question that we have is, can I trade via your mobile app on IB? And the short answer is not yet, but again, this is part of the roadmap. We definitely expect that to be available sometime next year as well. So again, we already have full integration with IB, which currently means that you can seamlessly connect your portfolio with us, but you cannot yet execute trades, although again, that is firmly in the roadmap for next year as well. So you will be able to do that as well. And then one other question is, what's the price for Pro? This, as I mentioned before, it's currently $100 a month for a single license. But for participants in this webinar, we'll actually extend you a special offer where you'll be able to try it for a period of time free of charge, just to give you a sense and to be able to convince yourselves that machines really can add quite a lot of value to both institutional and non-institutional investors. And we currently have a very, very large range of both hedge funds, private banks, investment banks, and so on, already leveraging Toggle to great results. I think that covers all of the questions. I mean, I really appreciate your patience and your time to bear with us. Oh, there's one question. Is there a retail investor price? Actually, the retail version currently is free, but we'll soon release a premium version of that as well, which we expect to be about $15 a month for IB users. But currently, you're able to get it free of charge. Cynthia, I think that covers all the questions that we've had, and I'm also cognizant of the time.
Well, Jan, this has been a terrific presentation. Thank you so much. I also want to thank everyone for your participation with us here this afternoon. By the way, we have been recording today's event, and each of you will get a direct link to today's recorded playback soon after the session ends. So if you do want to come back and revisit those concepts that Jan has been discussing today, simply watch your inbox later on this afternoon. And as I do want to remind everyone that from the Interactive Brokers website, you'll find under the pricing menu and research and news features, simply scroll down. Toggle will be listed alphabetically, where you'll be able to get a link to some additional information as well as how you can subscribe to this product. So with that, we are going to conclude our session here this afternoon. Once again, thank you, Toggle AI, for a terrific presentation. And Jan Szilagy, this has been wonderful. So thank you very much for all of your efforts. We will be concluding today's session, and you can all leave using the X in the upper right-hand corner of your screen. Have a great rest of your day off, and do remember to choose trade smart. Thanks, everyone. Have a great day.